Hey everybody, this is Matt with Option Omega. Thanks for checking out the video. We got a different type of video today. We're going to look at one of the rarely tested tickers on Option Omega, Tesla. Very much in the news lately, a lot going on with Mr. Musk, who is involved in several newsworthy things at the moment. But what we're going to work on here and look at and try to answer is the question, is Wall Street Bets right about Tesla? Of course, this is a terrible question to ask because Wall Street Bets is not a single entity. It's a bunch of random people, right? Anonymous people at that, on the internet. And it is a hive of very interesting takes. So here's what we have, and here's what we're going to do in this video. We're going to look at Tesla earnings. And you can do earnings plays pretty simply in Option Omega by just using our specific dates. So what I did was took this last earnings date, went a little bit before it, and then bought the first expiration option. I just did a 2 DTE after the earnings. Tesla had a huge earnings surprise. Let's take a look at it. If you look at CNBC, there is a ton of news on Tesla, but this is the week of October 28th, and as you can see in the last month, you can see the giant run-up we had post-earnings. So it was a massive move down from around the two mid-teens up to almost 270, which according to CNBC today on the 28th was a 52-week high. So Tesla has been on quite a run since this earnings. If you look at this play, this is just a very simple at the money, long volatility, long movement play. It was buying a put and a call. 50 delta, right around the money. And to give you an idea, Tesla was, again, in the teens. So right around 217, and the option would have closed Friday. You would have tripled your money. But what's interesting, this was a call, right, that is printing. I bet if you go pretty far out of the money, that call still printed money. So let's take a look. We're just going to run the 10 delta, and actually here, I can do this a little bit quicker. We'll just do it the last 30 days. It's just going to pull that one date, right? So yeah, that call was 86 cents. And 29 bucks. Let's just, just for fun, we'll go 5 delta. I mean, to show you the scale of the move, that also would have made it. I don't think it was a 1 delta, but maybe it was. Let's check. Let's see. Wow. Yeah. So even a 1 delta, a one delta 2 DTE call. That's how crazy the move was. What a move. 11 cents to nearly $4. I mean, just remarkable. What a remarkable move by Tesla. So with a 3,400% capture rate, is that an appealing thing to do to make Tesla earnings plays? Is Wall Street Bets right? Again, I have no idea what Wall Street Bets is thinking. All I know is that there are people who post a lot of insane screenshots in every direction, and most of them might even be made up because it's the internet. So we're going to try to take a little more data-based approach and look at some recent Tesla earnings. I've got 18 earnings dates from 2020. I think I'm missing one of the 2020 dates, but for the purposes of this video, this will be good enough for a quick video here. Because what we're going to do is just look at the volatility and the options pricing for these earnings dates. So what's super interesting is, a lot of people argue that options in general are fairly priced. This is a really straightforward play. You're just buying a put, buying a call. Again, I'm doing 2 DTE because I moved the day before earnings, tried to make sure it wasn't on a weekend, whatever. So this will basically give us the first expiration after earnings. That was the whole point. And what's interesting is for years, buying a straddle, buying volatility was a negative PE strategy. And then it's literally a stair step down, and it's been a stair step up. And this earnings was actually probably the biggest surprise to the options pricing we've had. It's pretty interesting. And just for illustration purposes, if we sell the volatility and look at it the other way, to where you are selling Tesla volatility. So before earnings, you are going short vol. It's just exactly what you would expect. That was a really good play for a number of years, and then it's been a terrible play and a really bad play since then. What's interesting is this backtester lets you do a bunch of really quick things. Maybe you just don't want to spend that much money. Maybe you want to buy a strangle. Instead of buying a straddle close to at the money, you could buy a strangle out of the money. That's an interesting backtest. But what it shows is, in general, it shows to me, I look at this and I think there's not a mechanical play that you can just do every time Tesla has earnings. Again, we look at that example and it doesn't, you can try just one side or another side. It doesn't really seem to matter. You would have felt great. And I am, just so everybody knows, I am intentionally capping the contract at one contract on these backtests just because I want to show them each as an individual earnings play, right? This last one was just probably by far that you've seen some upside call surprises, but in general, buying calls has been a terrible idea. Now, again, I don't have a profit target on here. Maybe that makes sense to put. You could turn this into a spread. You could easily buy a long condor. So I think the thing to take away from this is it's hard to find you could argue that there's a pattern, but it's hard to mechanically say, yeah, I'm just gonna sell condors or I'm gonna buy strangles. Like, it's hard to do that and look at it and think that you're gonna have anything other than a really random experience. Now, this is by nature, it's not a very robust backtest if you're looking to do something mechanical. I mean, it's got less than 24 examples. But I will say in recent years, the trend has been that Tesla maybe moves a little more than people expect. But for years leading up to that, post-COVID through the crazy bull market of 2022, volatility was very overpriced. So there's not a definitive thing. If you want to play around with this backtest, I'll just save the 50 delta version here and post it for you so you can play around with it. But again, these dates it's nothing magical. You can check them and tweak them if you want to get more granular and do a specific monthly expiration or something like that. You certainly can. There's not really a problem with that, of course. But for the purposes of this video, it just seems like noise. It just seems like randomness. And I think that maybe that's what Wall Street Bets is about posting those crazy screenshots that may be totally fake, but kind of interesting to look at. And another way to use the Option Omega backtester that a lot of people aren't using, but is certainly a way to do it. Thanks.